Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody guys. In the second video, as usual, let's take a look in the gold market. Here we have interesting combination of different scenarios that we could discuss today. Well, they are not equally probable currently. In general, as you can see, market is trying to foresee what Jerome Powell will tell, and I briefly have taken a look across the board on the headlines, and it seems that investors really expect soft and dovish statement from the Fed. Particularly speaking, they want to hear zero rates for long-term period and additional supportive measure to the liquidity measures through the economy, and also in the long-term period, preferably within the years. Well, any step out from this suggestion and market expectation, especially if the Jerome Powell will tell something about the inflation, that could be, well, this could lead to some unexpected result on the market, because market right now is growing on anticipation of this really dovish statement. As you can see, not only in the gold market, but approximately the same scenario we see on the cable that we discussed today. Euro in less degree shows the upward direction, but still it's also tending higher. So on the technical side, indeed, price behavior in the short-term sentiment stands bullish. And it seems that indeed upward action should happen. But we should understand that the major risk factors right now that we can't foresee and can't control, this is speech of the Jerome Powell that could turn everything from top to bottom. Despite how bullish the technical context right now is, one word about inflation could just crush this context drastically, and market just could collapse lower. That's why here we should make two things. First of all, we consider also bearish scenario, although currently it looks less probable, or even maybe not probable at all. Second, if you still decide to trade gold, cable or whatever, you should understand the risk that you could make the great trading plan based on the technicals, but speech could destroy everything. If this is acceptable to you, you're ready to risk, well, that's okay. You could plan your trades using the technical picture. So what we have on the daily? On the daily, market indeed has drifted slightly lower, but hasn't quite reached the COP target, showing the bullish reversal action. It's anticipation of the speech of Jerome Powell. This reversal session could put the background for either indeed upward continuation right to the new top, or at least closer to the previous top, some kind of the ABCD pattern we could consider here, or depending on Jerome Powell will tell, it could be minor continuation before the speech and then collapse to the downside if indeed, as I said, something will be said on inflation. Speaking on the bearish context, take a look. Potentially we can't exclude the butterfly. This could be formed here. It's 127 of the butterfly stands 1820, while OP of this ABC top pattern stands at 1802, so it's not very big difference here. Reaching of the 1618 this week less probable, or even probably not hardly possible, just because it stands too deep below the daily oversold. It's more probable that maybe market could reach this level. But for the gold market, as you can see, it could break the oversold significantly. Well, who knows what the Jerome Powell will tell. For example, if he will tell about the rising interest rates, I think that will be collapsed, that not everybody will hold. So oversold don't hold. So, for example, that's why keep ears to the wind and listen what Jerome Powell will tell. So that's potentially we treat this scenario with the downward action as less probable, but it still stands on the table. It is theoretically possible. If you would like to take the long position, it makes things to build your trade, found your trade on this reversal session in these lows, because if indeed this will be dovish statement, this candle will hold and market will just continue upward action. If this will be opposite scenario, in this case market will drop significantly below these lows. That's why it makes no sense just to place stop somewhere below the B point or keeping more extended stops. It's enough will be just to touch with this, stuck with this most recent upward action. On the 4-hour time frame chart, what we have, indeed, this was sharp reversal up around the same 618 level. Once the stops have been grabbed below these lows, this market just briefly, slightly drifted lower, breaking the shape of the reversal pattern, as we said, grabbed the stops, so head and shoulders total has failed, because as you know, minimum target of the failed head and shoulders is the bottom of the head, so market should just break down. But then sharp reversal has happened. From that standpoint, we could consider this ABCD pattern. The COP target is 1996. Suggests that nothing drastic will be said by the Jerome Powell. It will be an anemic statement. In this case, market could fluctuate a bit and then return maybe to some other action. Maybe butterfly will start to form or something of that sort. It stands for relatively clear as 1996. Next target is OP. If really dovish comments will be, this will be 1255. So this is the target that we could suggest could be reaching today, tomorrow. It's relatively near the market. It's just $100 per contract. It's achievable. So that's the levels you could consider if you intend to take the long position. On the hourly chart, guys, we're dealing still with the range that we discussed yesterday. Here is a clear bullish divergence forming, which also looks bullish. And take a look what we have inside the range. Here was bearish trap, and it's just spiked down. Market returns and back up to the opposite border. Here is bullish trap, market drop, again, grab the stops below these lows, forming another bearish trap, return it back up. With the additional factors and additional patterns that we have on the higher time frames, it seems that market is preparing for the breakout, at least based on the technical picture. If we will keep Jerome Powell words aside, by the technical picture, it seems that market's ready to show the breakout. And take a look. The ABCD OP target stands 1988. The classical approach to the breakout of the range shows 1996, which approximately agrees with the COP here. 1996, 1988, it stands around it. So that's the target that you could focus today if you intend to take the long position. That's our view on the gold. But we have to warn you again, this will be a tricky moment, because technical picture is a technical picture, while Fed speech could just change everything. That's the risk that you need to understand before taking any position here. So let's keep watching.